All right, today we're going to crack open one of the most popular investments on the planet, the Vanguard S&P 500 ETF. You'll see it with the ticker symbol VOO. We're going to see what it is, what's really inside, and who it might be a good fit for, all based on a deep dive analysis.
So let's just start with this question. What if you could own a piece of the 500 biggest, most powerful companies in the United States with just a single click? I mean, think about that for a second. A slice of all the major players in the US stock market in one go. That's the big idea we're digging into today.
Okay, first things first. What in the world is this VOO thing? We're calling it a mystery box because it's not a stock in just one company. It's something way, way bigger.
So VOO is an ETF, an exchange-traded fund, and its one and only job is to perfectly copycat something called the S&P 500 index. Just think of that index as a famous VIP list of the top 500 companies in the US. Whatever that list does, VOO does. Simple as that.
So here's the magic trick. Instead of you having to go out and research and buy 500 different stocks, can you imagine how long that would take and how much it would cost? You can just buy one thing, VOO, and boom, you instantly own a tiny piece of all of them. It's like diversification in a box. Okay, so we know what VOO is supposed to do, but what are you actually buying when you get it? Let's lift the lid on this box and see what's really inside. Whoa, okay, looking at where the money is, one thing just jumps right off the page. Information technology. We're talking over a third of the entire fund is in tech. Now that means the performance of those big tech companies has a huge, outsized impact on VOO's value, for better or for worse.
And you can see that concentration even more clearly when you look at the top individual companies. Get this, just 10 companies, and these are names you know, like Nvidia, Apple, and Microsoft, make up a staggering 40% of the entire fund. So when you buy VOO, you are making a very big bet on the continued success of just a handful of these giants.
All right, so you've seen what's in the box, but how is it actually done? What's the payoff been for owning this basket of companies? And maybe just as important, what's the price tag on all this convenience?
Well, if you look at its history, the performance has been pretty darn impressive. Over the last 5 years, VOO has given investors an average annual return of over 15%, and that's not just good on its own. It's consistently beaten the average for other similar funds. But this, right here, this is the real showstopper. The cost. The annual fee to own this entire collection of 500 companies is a mind-blowingly low 0.03%. Let me put that in perspective for you. For every $10,000 you invest, you're paying just $3 a year in fees. That is a game changer because it means more of your money is actually working for you.
Okay, let's pump the brakes for a second. No investment is a sure thing, right? Every single one of them has a warning label, so let's zoom in on the fine print for our VO box. You know, the main risks here actually come from its biggest strengths. It's kind of ironic. First, that concentration risk we talked about, it's so heavily tilted towards a few big tech stocks. And second, there's market risk. This fund gives you zero direct exposure outside of the United States, so its fate is completely tied to the ups and downs of the American economy.
And this quote from the Analyses just nails it. The performance of a few mega-cap stocks disproportionately impacts the entire funds. In plain English, if giants like Nvidia or Apple have a bad day, the whole fund feels the pain. The fate of the many is tied to the performance of the very, very few.
Okay, so we've officially unpacked the box. We've looked at what's inside, the track record, the incredibly low cost, and the big warnings. So now for the million-dollar question. Is this the right fit for you?
So who is VOO really built for? Well, the analysis suggests it's best for long-term investors. We're talking people with a time horizon of 5, 10, or even more years who can stomach the inevitable bumps in the road. It's really designed to be a core building block, a foundation for a portfolio. It's absolutely crucial to remember it's not meant to be your only investment.
And that really brings us to the final, most critical question, and it's one only you can answer. We've seen it all now, the heavy bet on big tech, that unbelievably low cost, the strong past performance, and the risks that come with it. So the question for you is, now that you've seen inside the box, does an investment like VOO fit your goals, your timeline, and your comfort level with risk?